So if I'm to go back into my 20s to start all over again, these are what I will be doing to grow my wealth, increase my portfolio, and to retire early. So early this year, I've been able to grow my investment from $100 to over $5,000 in just 9 months. And this is how I'll start investing if I'm to start all over again. And I've also been able to help a lot of people to grow their wealth through investing. And if you stick to the end of this video, I'm going to show you exactly what to do no matter the amount you earn monthly, so you can also start growing your wealth for financial freedom and maybe retire early. First, I'll show you why you should invest. Then we'll move to what to look out for before you invest. Then we'll move on to how much you should start investing. I'll also show you where you can also start investing and the strategies that you can use to invest. And the last will be the mistakes that you should avoid when you start investing. If you're ready to learn investing as a beginner, then make sure to stick to the end of this video. So why should you invest instead of saving? You see, investing is by putting your money to work, right? So that you can grow your money over time. Instead of just making your money sit in a savings account, it's better that you put it in an investment account for it to work for you. So imagine if you save $100 in a piggy box every month, right? In the next 10 years, I mean, this $100 is going to still be $100, right? But if you invest $100 in a stock market, earning an average of 10% yearly, in the next 10 years, it will become $260 by not even adding any peswa to it, right? That is the power of compounding. So why should you invest your money? So putting your money in the bank for years is very safe, right? But look at this. Inflation can slowly eat up your money and your savings. So if you put all your money in a savings account, at the end of the day, you will be deducted. You even lose some of the money to fees and other service charges. But if you are investing, it means you are making your money work for you. That is, you buy a piece of a company, right? Or you can buy bonds, funds, or even assets that hopefully go faster than inflation. So you don't just put the money to work. So the goal is simple, right? You want to reach your financial goals faster. So investing beats inflation. That means that your money will keep its value. I mean, you don't lose it when you leave it there. For example, if you put $10,000 or 10,000 cedis into an account, by the end of December, you're not going to get the same value. You're going to lose the value of the money to inflation. And investing will also help you build your wealth. That is financial freedom. You can also start getting passive income when you invest. So let's say if inflation is around 10%, I mean, in Ghana, we can go as high as 20-25%. And your money is in a savings account that earns like 5%. Imagine how much you'll be losing to just being in a savings account. But if you invest in assets that returns like 12%, 15, 18, 20, 25%, that will keep your money safe from inflation. So these are things that you need to check before you start investing, because safety is first. Before you invest, you have to make sure you build an emergency fund. I mean, at least you should have like 1 to 3 months for essential expenses if you are just starting. The ideal emergency fund should be around 3 to 6 months of your savings. This keeps you from maybe selling your investments in panic. I mean, in case of emergency and you need some money to do something, this money that you've saved can really help you so that you don't sell your investment, especially when you are investing in stocks. The next thing is you have to pay off high interest debts first. I mean, if you are having payday loans, credit card loans, and the rest, you have to make sure you pay your debts. If debt interest is higher than your expected investment returns, then you are in a clear debt. You understand? You need to clear your debt first. For example, let's say your investment is giving you 18% and you are paying 30% for a loan that you took in the bank. I mean, at the end of the day, there is no value in investing, right? So make sure you clear your debts before you start investing. You should also know your goal, I mean, and the time frame that you want to invest. If you want to invest for short term, that should be within 1 month to 3 years. And if you are looking for medium term, you should look out for like 3 to 10 years. If you want to go for a long term, right, that can be like 10 years or more. So make sure you choose the time frame or the investment time that fits your needs. So investing is not that complicated as we think, right? Whatever you can invest without hurting your life should be an ideal investment plan for you. I'm going to give you some specific starter plans. You can pick one that matches your situation. So the first starter plan is a micro starter. That is, if you are a complete beginner, you have to start as little as $200 or 200 cedis. I mean, let's say from 100 to 500 cedis. If you want to save at one time, right, in a year, let's say you want to save like one time, you can put in 200 to 500 cedis. But if you want to go in monthly, you can start with 50 cedis to 200 monthly. That is a great way to learn how to invest. The second part is the serious starter. So if you want to move from being just a beginner to being a serious investor, you can start investing like 10,000 to 50,000 lump sum in case you want to put it in and just ignore and focus on your life. But if you want to go in monthly, you can also start with 500 to 2,000 every month. With this such amounts, you really notice your compounding sooner than someone with a smaller amount. So if you really want to reach your goals faster, or you want to become a millionaire, that is the fast track starter. You can invest a huge amount like 100,000, right? Or 3,000 every single month. That's the faster growth and more investment choices. I mean, getting your first 100,000 is very difficult. If you're able to get your first 100,000, your second 100,000 takes a shorter time to reach. If you want to reach $1 million or 1 million cedis, you can start with a huge amount like 100,000 and your investment will keep up building. Or you can invest 3,000 every month, which will also speed up your investment. So let me give you an example. If you put $200 every single month into a diversified stock fund or index fund for 20 years, the portfolio averages around, let's say, 12% per year, right? You will have about 200,000 after 20 years. That's the power of regular investing, right? So if you invest 10,000 today and leave it for 20 years at 12% annual average rate, it becomes about 109,000. So how much your investment grows also depends on how much you start with, right? And how disciplined you are to your investment goal. So the decision is yours. You can start as low as you want. If you are a beginner, if you are in the university or you are in the high school, you can start small, maybe 50 Ghana cedis every month, or let's say 1,000 Ghana cedis every year. That is what you can start with. You don't need to stress yourself. You can start smaller. If you are younger, you have more time to invest, so you can start smaller. But if you are older, you need to put in more money to reach your financial goals earlier, before retirement or during your retirement. But you don't need to stress yourself. You can start with whatever you want to grow your money. So you might be asking where to put these monies if you want to start investing. There are several investment options like high yield savings accounts or fixed deposits. So you can start with high yield savings account and fixed deposits. Treasury bill is also a great way. I mean, it's a very low risk, low returns, but it's very good for emergency funds or short-term goals. So if you are planning to invest for a short term, I will advise you should go in for either a high yield savings account, fixed deposit, or either treasury bill. So if you are going in for a short term, you don't need to go into stocks. You don't need to go into high risky investments. So the next option is index funds and ETFs. If you want to invest in stocks, index funds are the best investments for long term. Stocks are high risk. If you are a beginner, this is actually good for beginners. You should just focus on index funds with ETFs like VOO, VTI, or QQQ. These have low fees, instant diversification, and ideal for long-term investing. The third option is mutual funds or unit trusts. These are professionally managed investments, and it's also good if you prefer someone manage your money for you. There are different types of mutual funds. We have mutual funds like equity mutual funds, fixed income, and the balance mutual funds. You can check out my channel for more videos on mutual funds. So the next investment option is stocks. I mean, that is investing in individual stocks. Owning a piece of a company is very important. I mean, you can invest in individual companies, but you should know that these investments are high risk. You should only pick when you do your own research and you can also tolerate in with swings. I mean, individual stocks can make you a lot of money. It can go like 20%, 50, 80% if the market is good, right? You can't predict, so you have to make sure that you do your own research. The next investment option is bonds and bond funds. When you invest in a bond, it means you are loaning a government or a corporate entity, right? So you give your money to the government and say like, let's say 5 to 10 years, and the government only pays you the coupon at the end of the year or twice in the year, and you will receive your initial investment at the end of the year. So you only receive your coupon discount. Let's say you're investing $1,000 in a bond that will give you 10% interest. So you will be receiving 10% every year for the next 5 to 10 years. I mean, depending on the years. At the end of the final date, they will give you the $1,000. That is how bond works. The next investment option is real estate. So if you want to go in for a long-term investment, you can add income via rent and dividends. I mean, you get paid every month or every year for owning real estate. So in Ghana, if you have even a house, it's really a great investment. You can get a lot of money if you have many rooms. So in Accra here, if you have a very comfortable chamber and hall or 2-bedroom, tenants can be paying like 1,000 to 5,000 Ghana cedis per month for renting your room. So let's say if a tenant is paying you even 1,000 Ghana cedis a month for 1 year, that is 12,000, and you have about just 3 to 5 rooms, you can imagine the amount of money you'll be taking every single year. And the last investment I'll talk about is crypto. I mean, these are speculative assets, right? It mostly has high returns, but very risky and volatile. You only use small portion of your portfolio to buy this. Let's look at how much you should invest when you want to start investing. The golden rule is start small, but start early. If you're a beginner, you can start with as little as $10 to $50 monthly, and that's all you can afford. As your income grows, you also aim to increase it by 10 to 20% every single month. So let's say if you earn a monthly salary, try investing like 500 a month. That's like 10% of your income, right? Over the next 20 years, at 12% returns, you're going to make over 500,000. So now let's move on to how to invest. So first of all, you need to open an investment account. You need to get a brokerage account from a broker, or you can go in with investment banks, or at least a unit trust. When you want to invest, you have to make sure you are taking out the fees or commissions that they are taking from these investment platforms or investment banks. You have to look out for the minimums, the available assets, and the ease of deposits and withdrawals. All these things are very important. And do they have a community support, or do they have a support team? I mean, when it comes to Ghana here, the support is very bad. When it comes to investment companies, the supports are very bad because they have less support team and many customers, right? You don't need to be so strict, especially on the support. Secondly, you also have to use dollar cost averaging. I mean, invest in a fixed amount regularly instead of just trying to time the market. So there are different platforms that you can invest on. You can either choose either IC Wealth, Blackstar, Plus app, or even Achieve app. If you also have trust issues with these apps, you can also go to their office. If you go to the Ghana Security Exchange Commission, you find a lot of these companies in there. I mean, the investment banks and these brokers there that you can start investing with. With IC World and Blackstar, you can just register on your app. And if it is about treasury bill and mutual funds, you can get it on IC Wealth. And Blackstar too, you can get it there. So you can also invest in Ghanaian stocks on the IC World and Blackstar. When it comes to US stocks, you can look out for apps like Bamboo. So Bamboo can actually help you invest on the US stock market. So Bamboo is where I do most of my US stocks. You can check out Bamboo, or you can also use Plus app to invest in US stocks. I'll be showing you full videos on these apps individually. So if you want to learn more, make sure you subscribe to this channel and don't forget to like this video. So these are common mistakes you should also make sure to avoid. First one is trying to get rich quick. Investing takes a lot of time. You have to focus on the gradual process, and when you hit the curve, the curve goes faster, I mean, to your goal. So make sure that you don't try to get rich quick. You shouldn't also put all your money in one investment, either going in for stocks, crypto, treasury bill, or anything, you should always diversify your portfolio. And anytime you want to invest, you have to make sure you do your own research. Another mistake that you should also avoid is investing money you need soon. Like, let's say, like your rent. Don't go and put your rent in the stock market. You might lose it when you need it. Make sure that you don't, if you are going in for a short-term investment, focus on a short-term investment and put your money in. And the last one is not following the hypes. Make sure you don't follow hypes, hot tips, instead of looking in for solid strategies. Focus on strategies and not hypes. So investing doesn't have to be complicated as you think, right? You can start small, stay consistent, and let time do the heavy lifting for you. So whether it is 100,000 or 10,000 a month, the most important thing is to start investing today, because the earlier you begin, the wealthier your future self will thank you. So if you enjoyed this video, make sure to like this video and also subscribe to the channel. And don't forget to share it to someone who needs to hear this.